I have an ultra cheap option trading strategy that I'm going to cover for small accounts in this video, where you can turn $10 into over $30, and you can repeat this process over and over to grow a small account quickly. This is the best combination strategy for huge returns and medium risk. This is a neutral to bullish strategy, and this strategy has helped me build my portfolio when I was trading a smaller amount of money. You want to use this strategy when you think a stock will be neutral or slightly bullish. In today's example, I'm going to be using Tesla stock because Tesla stock has moved down, and I think that this stock is going to move sideways or up. Remember, this video is just an example. I'm teaching you the strategies, the process, and the mindset and the experience that I've had by working at Goldman Sachs, 2 other hedge funds, getting a finance degree, and just overall investing for over a decade. This example is going to showcase how much money you can make with this strategy, and I would use this strategy for a number of stocks that you personally follow. Now, there is a caveat. You do need level 3 access. That is up to you to figure out. It's usually not that hard when you contact the broker. Now, let's go to trade Tesla options and carefully look at this position, because there are many nuances to running this position. The more complicated the strategy, the more there is to manage. But luckily, there isn't that much to manage with this strategy. So first of all, you can already notice that I am playing some options on Tesla. But this strategy is going to be very different. For this strategy, I'm going to pick a medium expiration date. If you're watching this in the future, what this means is I'm going to pick an expiration date that is 2 to 6 weeks. Right now, I'm going to pick April 12th, which is 19 days out as I'm making this video. So you just want to use this strategy for when an option is expiring in the short term. Now remember, you don't want to go too short term, because if you go too short term, there's not enough time to play out the position. And if you go very long term, then options become very unpredictable. And the whole point of this strategy is you want to predictably multiply your money and turn $10 into $30, or any small amount of money into a bigger sum of money, while avoiding too much risk. Now look, the most important thing right now that you want to look for is a tight bid-ask spread. Whenever I trade options, I'm always looking for a tight bid-ask. That's because whenever you're trading, even if the costs are free or very low, there is a cost to trading. When you trade within the bid-ask spread, you are actually losing money. You can't avoid this. You just want to look for a tight spread so you can have the least amount of fees. That's the first rule. The second rule is don't go too far out, because that creates too much uncertainty. Third rule, keep it very simple and pick an expiration date that's 2 to 6 weeks out. And then also, it's really important to select a proper option. Now for me, I'm looking at Tesla, and I think that the Tesla stock is going to recover. Now the other important thing is selecting a proper option strike price. I'm going to take a closer look at Tesla right now. I'm going to pull up the chart, because you do want to make sure that you're picking a proper direction as well as a correct distance within your strike selection. So right now you can see that I'm taking a look at Tesla, and it has come down quite a bit from the $200 level. It's currently trading at $170 with the RSI at 40. I personally think that this stock is going to move back up to the middle of the Bollinger Band, which is 181. You can also use an indicator like moving average. So if I use a moving average of say 50 days and I click save here, you will see that the moving average is 190. However, I can also manipulate this moving average to say 30 days and see where it has been more recently than 50. You can see right here that the moving average moved from 190 down to 185. I typically use a 50-day moving average. However, 30 days does give me a good perspective of where the stock can be again within this 30-day average. So going back to Tesla stock, what I want to show you is a strategy that is going to be neutral to moderately bullish that you can absolutely make a killing on. The first thing I'm going to do is I'm actually going to sell a call option. Now the first call option I'm going to sell is the 180. This is the anchor or the peak price that I think that Tesla will most likely end. You will make a lot of money regardless if it goes to 180 or not. You just need it to be around 180, and you will see that very shortly when I show you the P&L chart. A P&L chart shows you exactly where your profits are, and from there, all you have to do is analyze where the stock is going and manage the strategy properly. Okay, so I'm going to first of all sell a $180 strike. Now you can see again that the bid ask is good. It's only $10 apart. Now if this was $50 apart, I would not run this strategy, because this strategy requires multiple legs, as you will see and I will get into very shortly. The volume here is very good. Any volume that's over 100 for a trading day is good volume. The implied volatility doesn't matter so much on this strategy. You're just looking for a bullish move to the upside. And I'll actually show you 2 different strategies, so make sure that you do stick throughout the end of the video, because this first strategy is going to be moderately bullish, and next strategy is going to be very bullish. And both strategies will show you how to grow a very tiny amount of money into a huge amount of money. So right now I'm going to sell a call option, and the first thing I'm going to now do is the second option. It's important to go ahead and buy a call option. Okay, you want to do the opposite. You're selling, which creates your anchor, and now you're going to buy a call option. and this is going to just be $5 above, okay? This is going to be very interesting because this is going to be $5 above, but I'm also going to buy another call option. So this one went $5 above, and now typically for this strategy, I would go $5 below. So I would go from 180 to 175. But I want to show you a very interesting variation on this strategy to give you more upside exposure. So what I'm going to do is instead of going down by 5, I'm actually going to go down by 10, and this is creating an uneven spread. But you will see why this is going to be very interesting and very good for your overall results. So if I go to 170, you'll actually notice here that the volume is a little bit lower and the bid-ask spread is still pretty good. This is an in-the-money option. It's in the money because Tesla is just slightly over $170 per share, and this is very slightly in the money. The distances that I am usually picking for this strategy are going to be $5 to $10 apart. But honestly, you can just go for any strike price that's 1 above and 2 below. That's the ratio that you're looking for. The ratio is more important than the actual number. So if you're trading something like American Airlines or Palantir or another cheap stock, it's only $5 per share, then you can go 5, 6, and then down to 3, for example. So what I also need to do right here is I want to create an even ratio, okay? So I'm going to create a custom ratio here, and for each buy, I'm going to have one sell. So there's one buy here, one buy here. I'm also going to create 2 sells because now there's an even ratio. Now, what you will see here is the expected profit is really huge. I mean, this is basically turning $30 into $70. So this is more than 2 times your money. Now I'm using Tesla, which is a more expensive stock, so you can lower your costs a lot. I'll show you an example a little bit later in this video, but you can lower your costs a lot and make it a lot cheaper. But I wanted to show you a little bit more of an expensive strategy because this is a high certainty play that I have currently, but I'm going to show you both worlds. Now look, there's an importance of managing this strategy. So what I'm looking for is I'm looking for Tesla to make a move up to $180 per share, and this is where I will realize my maximum profit of $721 on this current trade. However, if it overshoots, I will start to lose some money, some profits. However, this is a bullish strategy. So overall, you can see here how even if this goes to the moon, I'm still going to be making money. In fact, I can make quite a lot of money regardless of where it goes, anywhere between $172 all the way up to whatever price it goes to. Now, as long as the stock doesn't go down, that's where you will realize a loss. And that's why when I would run this strategy, I would only put 3 to 4 or even 5% of my portfolio in this strategy. So if I were to run this strategy in my portfolio of $10,000, I would probably have anywhere from, $500 or $1,000 per position with this strategy. Now, for managing this strategy, I would go to expiration because what I'm looking for is I'm looking for the stock to move up in value. And as long as it's moving up in value, I really don't need to do anything because time is on my side. Although this is a buying strategy, time is actually on my side, which makes this so interesting because usually time is not on your side when you're buying options. But on this strategy, time kind of is on your side because, as long as the stock moves up even slightly and it ends here, you're going to be making money as time goes on. Now, I also want to show you what I would do on Tesla if I was just very bullish, okay? Let's just switch the strategy for a little bit. I'm going to show you 3 strategies in this video. I'm going to show you this strategy again in the third example, but using a cheaper stock. So let's get rid of this right now, and I want to show you what a very bullish spread looks like where you can actually multiply your money potentially even more than the 2.5 times that I just showed you. So what you can also do is, let's say that you're really bullish on a stock. So it could be Tesla, it could be anything, it could be any stock. Let's say that you think a stock could go up, in Tesla's example, let's say it can go up to $200. What you want to do is the way you get maximum leverage on a option is by going as far out of the money as possible while still having certainty that the option will end in the money. So let's say you think it can go up to 200, no more than that. What you would want to do is you would want to bet on a buy call position at the top of the range. If your top of the range hits, you can make really good money. So for example, the top of the range for Tesla, let's say we think it's going to be 200. I would simply buy an out of the money bull call spread. So I would go for 195, and this would be a buy call. Just make sure there's enough volume. So there's 1,000 volume here. That's pretty good. And you go sell call at 200. So in this position, you have a pretty small bet that you're making, $42. So 40 bucks. That you can turn into $458. Now, yes, you need the stock to make a really huge move, so you wouldn't really put all your money on this strategy. You would mix this strategy in to your portfolio overall. And again, you would potentially only put 5% of your money in this strategy, or even less than that. But when this strategy hits, you only need it to hit 1 out of 10 times. If you hit it 1 out of 5 times, you're going to be doing very, very well. So this is a 10x return, but you need a very huge move. In fact, you need the move to be pretty big here. It needs to be over about 10%, actually over even 12 to 15% on this particular trade. So you want to make sure that you do this when the stock has earnings. So typically, earnings really move a stock. So you want to do this on earnings, or you want to do this on a high momentum stock. For me, momentum is a very important factor. When I was working on Wall Street, I was actually an analyst looking at momentum. I was looking at momentum scores. So you want to pick a stock that has very positive momentum. For example, one of those stocks could be NVIDIA. So if you take a look at NVIDIA, this has been one of the best stocks to use all of the strategies that I'm teaching you in this video. So a bull call spread here would have given you really crazy returns versus just holding the stock. So a lot of people will just hold the stock, and yes, the stock went up a lot. It went up double, which is insane for a stock. However, if you were running bull call strategy and you were to do it every single month, in the past 3 months, you would have had a 10x return 3 months in a row. So 10x, 3 times is 10 times 10 times 10. That's 1,000x. That's more than the craziest crypto coin in the world, right? 1,000x, you can literally 1,000x your money if you're using the bull call strategy like this for out of the money options. Now, again, this is a risky strategy because if it doesn't do exactly as you are betting, then you're going to lose the capital that you put in. However, when you spot a momentum stock like an NVIDIA or any other stock that is going up on a tear, then you can use this strategy on a monthly basis or even 2-week basis. In that case, you would really make even more money because every 2 weeks, if you were able to 10x, that would be insane. But again, you want to put a small amount of money. So $40, you can put $100. Heck, if you have a bigger portfolio, you can put $1,000. And basically, even if you're broke, you can turn a small amount of money into a large amount of money with this option strategy, as long as you're being balanced and you're not risking more money than you're able to lose. Now, I want to go over a cheaper way to run the strategy that I was just showing you. So let's go to something like American Airlines or even Palantir, because Palantir is a stock that I've been talking about on this channel for some time. I've been absolutely right on Palantir, currently up 20% on this. Now, I don't have a large position, but I also have multiple portfolios. I love Palantir overall. I have a good amount, but I wish I had more. All right, I'm going to go to Trade Palantir Options. Now, this is going to be a lot easier to put up that small amount of money that I was talking about in the beginning of the video. So let's go to sell. We can sell, for example, let's say that we think that the stock's going to be about the same in the next 4 days. So you can go ahead and sell the 24.5 strike, and then you can simply go up by 2. So let's say we only go up to, by $100 or $1. So from 24.5 to 25.5. So I go to the 25.5. And then also, like I said, the distance here is 1, but on the downside, I can go for a distance of 2. So instead of 23.5, I would go 22.5. All right, so here I go 22.5. And then again, I need to create a custom order. So the custom order is going to be, 2 sells and 2 buys. All right, here, this can look a little bit different, and actually because one of the issues here with lower price stocks is they're illiquid. So you can see here the bid-ask spread is 2. Here it's 2, that's not too bad. But because they're so tight in terms of price, this is going to be a little bit more not as efficient. So actually, let me show you what this looks like. I also broke my rule. I said, let's go out a little bit further. I went 4 days. Let's go out something like 33 days. Okay, I'm going to show you a little bit of variation right now. Let's go to 25. Okay, I'm going to go ahead and go 20. This is an example, by the way. So let's go to 26. I'm going to go 2 down from 25. So I go to 23 here. And let me go back and create that custom order. And let me do 2 for 1. All right, now this looks a lot better. Now you can see how, again, this is looking very similar to the first example. However, now you don't have to put up as much money. You're only putting up $74. So I sat with many professional traders that have made 7 figures, even 8 figures. And the bull call spread that I just showed you in the second example, and then these 2 examples are very good strategies for trading because you are getting very good leverage returns as long as you're correct on where the stock is likely to end up. Now, this strategy is one of the, honestly, one of the strongest that you have in your arsenal of option trading strategies, as long as you have a big bull bias on a stock. So if a stock is going up or it's bottomed out, this is literally the best strategy you can run. Or simply if stock has momentum or you're bullish on the earnings. So an earnings play can go up 3 to 5%. Then this strategy, even if the stock goes up 3 to 5%, regardless of implied volatility crush, right? There's IV crush, which everyone talks about. You will still make money in earnings as long as the stock goes up using the strategy. Now, obviously not every trade goes your way. So, I'd be careful with how you manage your risk on this play. Like basically you still want to have the other strategies I talk about on this channel, watch my playlist because they're very important. And I don't want to be a fake guru and tell you that I'm winning on all these plays. I'm not. This strategy is a high risk, high reward strategy, or medium risk. The bull call spread is a medium risk strategy depending on what delta you pick. So if you go for a very low delta, right, it's very out of the money, that's a high risk play. If you go for a lower delta play, then that is a lower risk play. You can even go in the money bull call spread. Those are very low risk, but also lower return. Now, I've been doing this for 10 years and I have experience. So the way I get an edge is basically by combining research, combining technical analysis, and I want to be very certain, because for me, a longer term strategy is more certainty. And when I look at shorter term trading, it is more uncertain. So mix this in with the rest of your trading abilities, but make sure that you are picking an expiration date that makes sense to you. 2 to 6 weeks makes the most sense to me. If you go shorter term, you are going to experience more volatility. If you go longer term, that's actually perfectly fine, but you're going to experience lower returns, however, more certainty. If you have questions or simply want to get some emails from me about my strategies and my research and free PDFs, then make sure you click that first link in the description for more information.